Next up, we've got another great panel, this time focused on sourcing capital and fueling growth from abroad. We're going to hear from Canada's leading early stage VC fund, investing across both the US and Canada, and also get an overview of their current investment thesis and provide some insights into how VC-backed companies in the US will be able to leverage Canadian non-dilutive funding programs and fast-track immigration programs to help fuel their company's growth. So with that, I'm happy to bring up to the stage David Dufresne, partner at Panache Ventures out of Canada, Chris Ripley, CEO at Smarter Sorting, and Dina Santos, the Senior Trade Commissioner at the Consulate General of Canada here in Dallas in Texas. Guys, thanks so much for being here today. Looks like it's just me and you, David, huh? How's it going?
Yeah, this is turning into a fireside chat or one-on-one conversation.
You know, I'm happy to chat with you for a little while. Why don't you tell us a little bit about Panache Ventures?
Yeah, so Panache Ventures, we're still young. This is our first fund. Part of our team was the team that was managing the 500 Startups Canada fund for about a year. And then we launched Panache 2.5 years ago. So we're pre-seed and seed stage VC firm. We're based in Canada. I sit in Montreal. My partners are in Toronto and Calgary, so we really have that coast-to-coast presence across Canada. We mostly invest in Canada, but we've also made deals in the US. So about 15 to 20% of our investments are in the US. The rest are in Canada, across sectors. I see that Dina joined us, so welcome, Dina.
Good to see you, Dina. Welcome. How's it going?
Wonderful. Can you hear me?
We can, yeah.
Wonderful. My apologies, a bit of technical difficulties this morning, but so pleased to be here. And thank you, David, for starting the conversation. And Jim for hosting.
Absolutely. It seems like with all these virtual platforms, there's always some problem or another that comes up. So no worries at all. And yeah, Dina, how about you give a little bit of a brief background on kind of your history and what you want to add to this conversation?
Absolutely. So let me just start by thanking you for organizing this panel. And, you know, I'm very excited. David and I are very excited to participate in the Startup Week that you've organized, the Austin Startup Week. It's the 10th annual edition. And this year is quite special because it's virtual. My name is Dina Santos. I'm the head of our Canadian Trade Office here in Dallas. I'm one of 13. I represent one of 13 Canadian consulates across the U.S. And our mandate, we cover the state of Texas. And our mandate is to help Canadian startups do business here and help Austin startups and Texas startups grow in Canada as well. So we're connectors. Before transferring to Dallas, I used to lead our Palo Alto trade office. So quite well-versed in the Canadian and U.S. Innovation ecosystems. I'm particularly excited to welcome on the stage today Dave Dufresne from Panache Ventures. I think, Dave, you've been giving all of us an overview of your background. And really the goal today is, you know, obviously, you know, we're going through a world pandemic crisis right now, but our goal to connect our economies have not changed. We're very focused on removing barriers and facilitating connections, sharing resources in order to grow our mutual innovation and startup ecosystem. So Dave, I think you had kicked us off by presenting yourself and talking a little bit about Panache Ventures. And really the goal for this session today is to drive excitement and try to further connections between our respective ecosystems. So Dave, let me pass it over to you. I know you were talking about Panache and your background. I mean, obviously you're well-versed in leading and successful startups to grow globally. So let me turn it over to you just to continue your introduction of yourself and your fund.
Yeah, okay. And I have to say I'm excited to do this. Sad that it's has to be remote and virtual. I've been to Austin many times, probably close to 10 times, usually for South by Southwest, like probably the vast majority of people. And I love it. I think Austin's a fantastic city, and very impressed by the tech ecosystem in Austin and in the state of Texas as well. Yeah, so Panache, I was saying, is probably, I think we're the most active pre-seed and seed stage VC firm in Canada in terms of number of investments. We invest early. Our investments are fairly small. Like we'll invest between 100,000 up to $500,000 as a first check into a startup, and then keep reserves to maybe follow on for up to $1 million. Typically in their next seed round, larger seed or Series A, but then we take a back seat. So we're really focusing on that seed to A stage, and we want to be the best firm in Canada for startups to get to that Series A with relevant and sophisticated investors. Often those investors are in Canada, but very often they'll be in the US as well or elsewhere. So a big part of our job is building those relationships, and your offices have been pretty useful and pretty good in helping us build out relationships with both co-investors for the pre-seed and seed rounds and later stages, so Series A, Series B. So that's us. I mean, we're a team of 8, 4 partners and 4 staff. As I was saying, with offices in Montreal, Toronto, and Calgary. We invest across sectors, but mostly software. We try to stick to capital efficient sectors. So, so biotech and pharma are probably out of our expertise. And then anything that needs to build a factory or manufacture like some complex hardware is probably too capital intense for us. But then we've invested across the range of software, fintech, cybersecurity, a lot of applied AI. I can talk about that a little bit later. Some CPG and direct to consumer, not many, but we're starting to see some good results there. And we've also made, I think, close to 15 investments. We have, as of today, we have 74 portfolio companies in the first Panache fund, and I think about 15 to 20 of them are in the US.
Wonderful. Well, during my time in the Valley, I helped Panache expand to Canada. So I have a special working relationship with your team over the years. David, I'm really excited. I was actually looking at our Canadian Venture Capital Association numbers for this last quarter. And, you would think in the context of COVID and the pandemic that you would see less investments into startups, but that's not happening in Canada. Actually, this last quarter was the most solid quarter in terms of early stage venture capital investments and later stage investments. I think there was about $1.7 billion Canadian invested over 145 deals, 23% higher than the same quarter last year. Like we're just skyrocketing in numbers, and a number of large deals concluded as well. So what do you explain this phenomenon? I have to say also our office in Dallas that covers Austin has been quite active, connecting with local startups in the community, trying to talk to them about the investment business case of expanding their business and seeking venture capital, early stage funding in Canada. So what are you seeing on the ground in Canada?
Well, what I'm seeing is, I think when lockdown hit, and in most Canadian provinces, it was around mid-March that basically everyone was sent home. The schools were closed. I think everyone was in panic mode for a few weeks, trying to understand what was going to happen. Are we getting into a deep recession? Is the stock market going to crash? And after a little while, the stock market started coming back up. And I think we all realized, I think everyone was in triage mode, looking at their portfolios and trying to understand who was going to be in trouble in the short term, mid-term, long term. And we definitely did that exercise for a few weeks. But after that, we realized that for every travel tech startup in our portfolio or commercial real estate tech company that was affected in the short term, we had as many, if not more, startups in online collaboration, remote work, in digital health, cybersecurity, e-commerce, last mile logistics, who were all seeing increasing demand. So I think that, and that's just our portfolio, but I think as an ecosystem overall, like we've seen increased demand for what a lot of these startups are offering. And then, so that's part of it. I also think that, and I think it's the same in the US, like a lot of there's been a lot of new funds raised in the last few years. A lot of firms have a lot of capital to deploy. So like even if you're working from home, like your job and your mandate with our investors, our limited partners, is to deploy this capital. So we all went back to work and started doing deals again, and some large deals. And I'm hoping now, I'm still concerned about the overall state of the economy. I think in both Canada and the US, the governments were reactive very quickly. I do think now that we're going to like some of these subsidies and checks and are going to stop or slow down. So I'm still concerned about a longer term recession and how that will impact the different sectors that our startups are in. But for now, it hasn't been. We haven't seen that much of an impact.
Wonderful. So, obviously our Canadian government has deployed a number of programs to support the Canadian tech startup scene. A lot of, loans and programs to support working capital, salaries, rent. When we talk to local startups here and also VCs, family offices, private equity firms, they're quite interested in how our Canadian incentives, including our generous R&D program and our other incentives, help maximize their dollars in Canada. Can you perhaps drill down a little bit more on that business case for our audience today?
Yes, absolutely. And a big part of our thesis as a firm is a bet on this ecosystem, right? We do think that Canadian startups have almost an unfair advantage in terms of their cost base, partly because a lot of cities here, the cost of living is much lower than some of the larger tech hubs in the US. And quality of life is excellent. Like you all know about single payer healthcare and very affordable, high quality education. So that's very attractive for a lot of talent. The different levels of government, like from the federal SHRED, scientific, research, experimental, development, tax credits, like means that a lot of the money you're gonna spend on R&D, basically, like up to 35% of that gets reimbursed. So that's a massive advantage for our companies. And to that, like a lot of the short-term COVID-related subsidies and grants and loans, like aren't going to be there for a long term. But there's a lot of help to export, a lot of help to commercialize. There's a lot of local subsidies or forgivable loans, depending what region you're in. I mean, I have a few companies in Atlantic Canada. Like the amount of resources that they have access to, non-dilutive government help is just amazing. And I keep saying to my startups, like, this is an unfair advantage that you have. You need to put in a little bit of work to get it and make sure that you qualify. But once you have that, like, it means that if you're raising a seed round, and let's say you have a competitor that's based in the Bay Area, and I think Austin is also a pretty good place to build a company. But if your main competitor is in the Bay Area and you raise $1 million, like they need to raise $3 million to have the same working capital as you do. So that's definitely like a big advantage for Canada. And then we're starting to see more and more companies that, even if they're US-based companies, will build out their R&D team or their development team in Canada, and just because of that cost advantage.
Absolutely. And, you mentioned this. We've got Smart Sorting out of Austin that actually they've expanded in Montreal. We also have, on the other end, we've got Canadian firms like Jasper Rim, and Bold Commerce, both developing e-commerce developer solutions, moving to Austin to be closer to their clients. So, of course, the tax incentives, the corporate tax rate, The dollar exchange, to be honest, have given us somewhat of an unfair advantage. And our Canadian startup community is actually building and growing in Austin as well to access clients here locally, which is, as you know, Texas from a GDP perspective compares to Canada. So, and we're very comparable in population. So there's great opportunities from a customer acquisition in addition to developer talent access piece in both markets as well. From a talent perspective, I know Canada obviously has been quite aggressive these last few years to try to recruit top talent to Canada. We've set a goal of trying to recruit about 3 million new Canadians, half of them in the STEM area. And we've also launched competitive programs like our global skills strategy, trying to help skilled labor get work visas in Canada within a 2-week time frame.
Yeah.
And those work permits also expand to their family members, which is really a program that really gives us a great competitive advantage at the present time. Have you seen your companies in your portfolios take advantage of that program?
Oh, absolutely. And all the way from founders, like a lot of our founders came to Canada through one of these programs, and either they came as an employee at a different startup or different company and then moved on and launched their own startup, or they've been able to complete their teams who are high quality. It is hard in Canada to find good engineers and developers, as it is in most US markets. It's very competitive, and but yeah, to be able to find and attract immigrant talent has been a pretty good advantage for many of our companies. And I don't mean to get into politics, but the current administration in the US is making it very hard for talent to go to the US. All the way from students going to university to people moving to launch a startup or join a startup. So right now, Canada is very, very attractive, and we're also seeing a lot more, and that's part of why I'm excited about the ecosystem. We're starting to see a lot more Canadians who went to the Valley or went to the US for a few years, especially on more of the commercial talent, like those head of business development or VP of sales, chief revenue officers. A lot of them are coming back for either personal reasons, family reasons, or because of politics. They're coming back to Canada and joining our startups with that experience of having scaled companies. So to me, that's very exciting.
Absolutely. And let's drill down a little bit more on the ecosystem. We've also made a lot of investment in, really, we're trying to become the world's largest incubator, right in the backyard of Texas and the US. And we've made a lot of investments these last 2 years, and we've invested about $2 billion in terms of developing superclusters in artificial intelligence, plant protein, digital media, ocean technology, and advanced manufacturing. And really, the purpose of these ecosystems is to develop commercial technologies. Big companies are brought in order to vet the product market fit. Can you perhaps talk to us about what you've seen in terms of the ecosystem development in Canada? You talked about a number of areas, subsectors of area of growth, but how has that influenced the building and the opportunities for your portfolio companies?
Oh, it's massive. I mean, the superclusters are a huge help. It's somewhat indirect because typically our startups are too small. So what ends up happening is that they'll build a project with one of their large customer, and then offset like a big portion of the costs of that project using funding from the supercluster. So one of our companies in Newfoundland that they build collaborative engineering software. One of their customers went through the Ocean Tech supercluster to get the project funded. So that helped them win that deal with a very large customer. In the Scale AI, so Scale AI is the AI for logistics, based in Montreal, but investing across Canada. Same, like we're seeing a good number of our companies build out project with some of their customers. to get them to apply some of the advanced machine learning and deep learning progress that's been made into their specific industries, working with some of our startups. So that's been super helpful. There's been also good accelerator programs that are partially funded by government, partially by corporations. Like one that comes to mind because they're active coast to coast is Creative Destruction Lab, that has tracks in I think Vancouver, Calgary, Toronto, Montreal, Halifax, and Oxford in the UK. And they were going to launch in Paris. I don't know. I think COVID maybe delayed that. But each city or each center has their own specialty, right? So Halifax has ocean tech, Vancouver has digital health, Calgary has tech for energy, Montreal has AI for logistics, Toronto has quantum computing, health. So that's, for us, selfishly, that's been a massive source of deal flow. But for founders and entrepreneurs, it's a really good way to get exposed to tons of really high quality mentors, and that's a accelerator program that's free. It's not costing them any equity. Everything is paid for by sponsors. Any equity, not costing any equity or any dollars. So Canada has a lot of these pretty unique programs that are benefiting the whole ecosystem.
Yes, and in the Valley, we were helping companies, big companies like Salesforce, Samsung, LG, open up Facebook, Google open up AI offices actually across Canada, primarily in Toronto and Montreal. And at the end of the day, they were really looking to access top talent. Regardless of the cost, like we've talked a lot about how we can, go a long way with our dollars in Canada. But at the end of the day, what we hear from local investors here and startups is that it's really, and big multinationals, is it's a race for global talent.
Oh yeah.
And we have that in Canada. We even have a master's in AI out of University of Toronto, as you were describing those clusters. So we've been trying to be just more avant-garde on that front. In terms of market access, we've also been leading over these last few years the negotiation at a government level of free trade agreements with a number of global markets around the world. So at the present time, Canada is the top G7 country that has the most free trade agreements with other countries around the world. We have 14 free trade agreements, including USMCA, or formerly known, it's NAFTA 2.0, with the US, and we have free trade agreements with the EU and Asia and South America through CTPPP. Basically, we've negotiated free trade market access to 2/3 of global consumers abroad, 51 countries. So how do you see your startups gaining market share globally through these free trade agreements as part of your growth strategy?
I think it's a massive advantage also, but I also think that if I compare the Canadian startups to US based startups, like for most markets, if you're a technology startup, you're not going to focus on the Canadian market. Like the exceptions may being health and digital health companies and maybe fintech companies where just the Canadian population, is enough to build $1 billion company. But outside of that, like if you're like, no one's thinking I'm going to launch a startup and focus on the Ontario or the Toronto ecosystem, and no one's building a startup to focus on the Canadian ecosystem. So every company has that mindset where we need to be a global player. Whereas I think if you're based in, I think maybe some US startups think US first and think and it's partly true. Like if you're able to dominate your market in the US or in a region in Texas or in the Midwest, you might be able to build a massive startup. But in Canada, it's just not true. So the whole attitude is to be global from day one. Also helps that like Canada has 2 official languages, so most people building software already think about that internationalization, localization, because they have to do it if they're going to serve the Canadian population. So to then start adding, Spanish and Portuguese and start targeting Latin America is super easy, and even more so because compounded by the fact that you probably have people on your team that speak Spanish, Brazilian, Portuguese, because a lot of our cities are super multicultural and it's easy to get talent. So add to that all the free trade agreements that make it easy for companies in Canada to transact globally. I think building teams in Canada, having your startup base in Canada, makes it super easy to start thinking about going after, like, even just here in Montreal, like most of the population speak French. So to start targeting the European market, where you're in Montreal, is probably a lot easier than when you're in Austin, right? So that's, it's definitely one more strength of the local ecosystem.
So funny enough, you say that. I actually speak Portuguese and Spanish. But a fun fact, actually, in the Toronto region alone, we have over 200 languages spoken. And there's actually 196 countries in existence. So in any event, we're quite multicultural. And if you're looking to, do sales through Canada, you could definitely have that language competency at the same time, keeping the same, timing with, your headquarters if it's in the US from a business perspective. So that's also an advantage that we've heard over the years.
And you alluded to it earlier, but the exchange rate, like the last year's Canadian rate has been pretty low. So and because most of the companies sell in US dollars and often to US customers, having your costs, like paying your wages and your rent in Canadian dollars, but then getting revenue in US dollars, like is a big advantage. But you're right. I mean, one of our startups here in Montreal has 12 employees and 18 languages spoken among them. So more languages than employees.
Absolutely. And we're coast to coast, right? So, very easy in Vancouver to have talent that speak Asian languages, and, from the East Coast, Toronto, Montreal, Halifax, Newfoundland have specialty languages towards Europe and the rest of the world. In terms of mentors, because I feel that that's something very particular to Panache, how, for companies that are listening on the line today, if they want to connect with you and really look at you as a potential seed investor, what can you really bring to them to the table?
Well, like I'm gonna say what I tell all founders, whether they're in Canada or in the US. Like we're a small team managing a large portfolio, so our involvement with each of our companies varies quite a bit. The one constant is that, as I said earlier, we're focusing on that seed to A stage, and what that means in terms of how do you build out the team, how do you build out the narrative, right? The pitch. How do you think about what metrics you need to focus on and what metrics you need to show? And then what investors are you going to target for the next stages? And when do you start meeting them? So like having that expertise and having that list of investors that we are in touch with and that want to see our deal flow is kind of our secret super weapon. But then we're all ex-operators, so we've all been entrepreneurs and founders ourselves. So we can help our founders on like some super tactical issues. We can help them with hiring. We can help them sometimes with like I helped one of my founders with this pricing strategy recently. And recently I talked to another one of our founders, and her issue is that she had made the decision to fire one of her first employees and had never done it and was kind of traumatized by the idea, like rightly so, and had no one to talk about it with, right? Because you're not going to talk to your employees, or so we talked about it, and like having had to live that experience and explaining like how you have to think about it, how you have to message it, like that was like very tactical, very ad hoc help that we provided in that case. So and then because we're a small team, like we have a lot of our LPs are active angel investors. And so very often we'll ask them to be involved in our companies. Like sometimes they'll co-invest with us, but often they'll act as advisors. They might take a board seat, because we try to avoid taking board seats ourselves, but we'll help like use our network to find the right individuals to help you.
Wonderful. And really that operator piece, as well as your connections to later stage investors, that's certainly of great value to any startup looking to grow internationally and get to the next stage. Another theme I wanted to talk about in this broadcast relates to supporting women and diverse entrepreneurs in Canada. We've also, as a Canadian federal government, have put a big emphasis on trying to develop that community, not just from the startup front, but also try to get more more women into becoming VCs in Canada. One leading government venture group called the Business Development Bank of Canada has launched a few years ago a $200 million venture capital fund focused on women founders. How have you seen that translate into your portfolio companies and the need for that special support to women and diverse communities? I know Austin is quite strong on that front as well.
Yeah, and there's still a lot of work to do. Like even down to our firm, like we're 7 dudes and 1 lady, so we're definitely hoping to do better. And our approach, at least for our firm, has been to focus on the top of the funnel. Like next time we hire, like we want to make sure we interview at least as many women as men, and we'll definitely prioritize finding a woman for the next roles that are going to open up in our firms. I think most startups, and same for founders, like I think last time I looked at the stats, we had 18% of our startups had at least 1 female co-founder, which is slightly better than the national average, but not exactly where we would like it to be. But again, I think a lot of work needs to be done at the top of the funnel, like making sure that that women and other underrepresented populations and minorities do feel like they can get into entrepreneurship, that they can get into STEM, into technology first, and then they can take a path towards startups and either joining a startup or launching a startup or joining a VC firm if you have more of the business side of things. I absolutely agree that the incentives that the BDC is a good example are putting forward, that's extremely important. And what I'm hoping is that we're going to start seeing more and more success stories. I think, like I'm thinking of Michelle at Clearbank, who I think is an example for a generation of young female entrepreneurs in Canada. And I can think of many more examples. And hopefully we have a few in our portfolio that are going to be the next, female-led success stories of Canada, which is going to foster just more people, more women, more minorities wanting to come into the ecosystem. And another part of it is to I think the ecosystem is kind of taking stock or realizing that we have underlying biases that we need to work on. And like in my case, it means like I'm trying to, because we get tons of decks and people connecting with us and asking us if we want to fund their startups. Like right now, I'm trying. When my attitude has been, if I see, and very often we won't even take a meeting, right? Because there are so many hours in the day, and if we look at a deck and feel like it's not for us, like we'll pass through it quickly. So in my case, when I do see that one of the founders is either a woman or come from a minority, like I'm making the effort to take the call or take the meeting, even if I don't think it's necessarily for us, but because I might have a bias that will get changed or will get put aside by a meeting. And if not, well, at least I'll be able to provide advice and then keep tracking them over their career and maybe fund the next startup that they're part of. So I'm like, personally, I'm hoping that this will help balance things for the ecosystem here.
Thank you, David. And just to close on that, Michelle from Clearbank came down to speak at South by over a year ago, and she kind of said, you can't be what you can't see. So the whole piece on the role model within the, from when you're young to, looking at leaders in the community is quite important. Keep up the good work and trying to making that extra effort and trying to support that integration in the community. Let me go to some questions from the audience because I've seen some come in our private chat here. So one question relates to the legal issues. What type of legal issues do you encounter raising funds or investing across borders?
Between Canada and the US, there's pretty much none. It's a problem that's been solved many years ago. Any respectable law firm's done it multiple times. Sometimes it means creating a exchangeable share structure where you're going to create a American corporation and Canadian corporation, but it's not an issue. In both ways, for Canadian firms to invest in US and US firms to invest in Canada.
Absolutely. And if you need any information on that, after this broadcast, we'll post our contact information. Our office in Dallas can offer, and we actually also have an honorary consul in Austin, Brian Haley, that was recently named. We're happy to connect with you and provide that information. We provide free and confidential services, so we could help you on that front. Another question relates to valuations. What do you think about inflated valuations for startups? With COVID going on, there's a lot of activity going in healthcare, telework spaces, which could lead to higher valuations based on the trend. Curious to hear your thoughts on that front.
I don't blame COVID. I blame YC. It's no, actually, I think there are tons of inflated valuations in a lot of US markets. Even in Canada, like Toronto right now is very competitive at the seed stage. And Montreal, not as much. And I think the rest of the Canadian ecosystem, not as much. I think it's a bit of what's the word I'm looking for? The inflated valuations come from the fact that in a lot of these markets, there's more money chasing deals. There are deals worth investing in. So it's both a matter of like a lot of angel investors, and overall that's good for the ecosystem, right? More angel investors, but if they're all chasing the same few deals, then it means an inflated valuation. I think a part of it also is that because the later series of investing, the Series A, Series B, have become so competitive, a lot of those firms now try to place bets at the seed stage. So they'll write small checks into these startups, basically buying an option to write a much larger check in the next rounds. So they're a lot less sensitive to valuations at that pre-seed or seed stage than investors like us or investors like angels would be, because they don't care. Like all they care about is if they write you a $500,000 check today, that's because they want to write you, $10 million check in your Series A or $5 million. So they don't care as much about your current valuation as they do about your future valuation. So that's kind of a double-edged sword, because then you need to grow into that valuation, and no one wants to have to live through a down round. And it's also a double-edged sword because if that, often they're name brand funds, if they decide for whatever reason to not invest in the next round, that sends a pretty bad signal to the rest of the investors. And then of course, like right now, because of COVID, like we're seeing every investor wants to invest in the next Zoom or in the next, online collaboration tool, or the next online e-commerce platform, or the next virtual telehealth startup. So same, like I always use the analogy of houses, right? If you have a house that's in the hot neighborhood, it's going to be more valuable than the exact same house that's in a suburb where no one wants to live. So right now, a lot of companies are at that house, and everyone wants to give them their money. So price goes up.
So you've mentioned that you don't have enough hours in the day to look at all the decks and take everybody's phone call. What what criteria are you looking for in order to make that decision to take that call?
I kind of look for scale. Like obviously at the early stages, it's hard to predict who's going to win and who's going to fail. But the first thing I look at is the idea. Like, is that a big idea? Is that something that's going to affect a massive market or an industry or a lot of people? Or is it something that's, affecting a niche market or something very local or limited scope? And then I look at the difference it brings. Like, is this something that's a nice to have, that's incremental innovation, that's going to make you 5% faster or cheaper or more efficient, or is this something that's going to make you 10 times faster, 10 times cheaper or 10 times more efficient? I'm kind of look for that delta between like what is the situation today in an industry or in your world? Why is it unacceptable for you that it is this way? And what's the difference you're going to make? And trying to gauge what is your ambition, right? Because we need to understand, like, are you looking for that trajectory of going from 0 to $1 billion in 4 or 5 years, or are you looking to build something that's going to give you a nice lifestyle, and which is nothing wrong with that. Mm-hmm. But venture capital might not be the way to fund this startup. So a lot of the startups I end up passing on just because I look at their deck or the first few pages of their the summary they send me, and I'm like, yeah, this is too niche of a market, or this is a market that's already fragmented, that's been won already. Yeah, so that's the main reason for passing.
Going back quickly to valuation, what other key terms you could use to get around that?
I don't like to obfuscate deals or make them more complex because we can't agree on a valuation. So, like, people will do tranches or milestone-based funding, or they'll negotiate warrants or multiple liquidation preference. Like, I hate that. I'd rather keep negotiating valuation up to a point where we're both happy and do a clean, simple deal.
Wonderful. And one last question related to incentives around early stage startups in Canada, both in COVID and non-COVID context. I feel we've talked already about that, but in essence, based on all the programs and incentives available, you could get about 60% of your R&D labor costs reduced in Canada. That's the bottom line. And we're about to close our panel. So David, thank you so much for participating. We look forward to continuing to connect our Austin and Canadian ecosystems together in order to grow prosperity and wealth in both our communities. Thank you again, everybody. Have a wonderful afternoon.
Thanks, everyone. Have a good week.
Awesome. David and Dina, thank you so much for being here today. It's really awesome to hear all the initiatives Canada is taking to help drive their innovation ecosystem. Thanks again for being here, and, fingers crossed, hopefully you can make it in person next year. With that said, this brings us to the end of the fundraising track at Austin Startup Week. I want to first of all thank everyone in the audience so much for attending. There was tons of great speakers and some really actionable advice that's going to help you guys help fundraise successfully for your business. Next up on this stage, we do have the Entrepreneurship 101 sequence. That's beginning at 12:45 p.m. And in the meantime, go head over to the networking and go connect with some of the other attendees. One last time, thanks again, everyone, for being here. My name is Jake O'Shea. It was my absolute pleasure being the Fundraising Track advisor and hosting today's event. And I hope to connect with some of you here soon in the networking feature. So I'll see you there. Bye-bye.